everybody. Welcome to the Trading Market Technicals morning call video for Thursday, August 2nd. And we did have our one of our risk events that came out yesterday, which was the Fed announcement rate decision at 2:15. And likely the Fed did not do anything, which I really thought that, in my opinion, in my honest opinion, that they wouldn't do anything. Draghi really did a lot of the work for them last week on Thursday, stating that they would do anything to keep the euro together. So that really, I would say, put a little damper in the markets. But however, I will say that the markets held up relatively well. If the markets rallied 50, 60 S&P points last week on that anticipation the Fed's going to rally, what my first reaction was they're going to have a hard sell-off. And yeah, we did sell off at the end of the day, but futures held up very well overnight. They're up 2. So, you know, there definitely is a bid under this market, so I could definitely see how the shorts would be frustrated, you know, running up on this event and then not really selling off at all, quite frankly. My guess is that they're waiting for ECB to come out, which would be sometime today. They're coming out with their rate decision, and they're going to see what Draghi says. Are they going to have is he going to really do what he said last week, and what is he going to do? That's going to be really key and really important here. So that being said, aside from that, you're going to have another event risk, which is going to be the monthly non-farm payroll jobs. So that's going to be very, very highly watched, and anticipate that that the jobs are going to tick up a little bit, and they have been. So today's initial jobless claims. So we'll see what happens today. But you can see where the frustration lies. You know, we've been really, this whole week, we haven't done anything. I'm going to show you the 10-minute chart just to look ahead. But we continue to see deterioration in our indicators, looking sort of speak, quote, looking under the hood, checking under the hood. Markets continue to diverge. So there's going to be something major going to happen. And the reason why it hasn't happened yet is because the central banks continue to intervene with the markets. So please be aware of that and be on your toes. The market could turn around on a dime in any given moment during a trading day, just like what happened last August. So please, guys, very important. If you're in the money, tighten your stops. If you feel uncomfortable, reduce your risk by reducing your share size. Okay, very important. But anyway, get back to the markets from yesterday. We had very little reaction, up, down, bunch of big chop, and then we sold into the close, putting the indexes in the red for the day. So really not much to say aside that. I want to get into these technicals, I'd rather really work on this a little bit more. As you can see here, bullish percent S&P. I like looking at this, and you can look at this as well as the NASDAQ, bullish percent NASDAQ, and you could do bullish percent transportation sector. So this is a nice key indicator. As you can see here, we've been really above the 8-day moving average, and it's holding up relatively well, I will say, but giving us an overbought reading. So this is something that you need to keep an eye on. The NASI gave us a sell signal. I mentioned back I think a week back or so, gave us a sell signal, and still on a sell signal, guys. So this little wedge, and I'll show you that in the chart. This is just the composite. Same thing, shows the same as the S&P, showing a nice big rising wedge. And the bearish rising wedge will not trigger until you break the lower trend line. I'll get that in a moment. But again, NASI on a sell signal. Now our trusty NYMO McClellan oscillator here rolled back over. Not stating that it is overbought, because overbought readings will give us somewhere in this area here, down about 80, 90, and 100, really up in this area. But that doesn't mean that it can't work its way lower. So my theme here is that this thing rolls lower and continues. So with the overbought readings we have in the other indicators, our NYMO is not overbought at all as of yet. So that means that there is still plenty of room to go down to the downside. S&P above the 50-day moving average, way into nosebleed sections, and still here we are still hovering above the 68, overbought. So that needs to unwind before we can really rally high. Now that doesn't mean we can't rally 20 S&P points to get that at 1400, 1410 rather. But still, guys, overbought, using caution. Swing trading really is non-existent for me. I'm not really swing trading. I'm waiting for this market to at least get some sort of a little bit of a sell-off here, put some sort of a top in, and then rally down a little bit into some key pivotal support areas, and then look to buy on a swing. Okay, but right now it's not the right time. If anything, the time is to continually put your hedges on. I've been telling for the last 2 weeks. Okay, stocks above the 200-day moving average. Again, very, very toppy, rolling over. Our indicators are rolling over. So this is something that you really need to keep an eye on. Now, I want to get into, and I've been talking about copper, Shanghai, the dollar, transportations, and I just want to stress that this is something that's very, very concerning. And any market technician will tell you that if the Shanghai isn't rallying, market's not going to rally much further. And this is a good sign, right? We had a little bit of pop up, very typical to break support, back test support, which is now resistance, and resume the downtrend. Now, I will say one thing. The good thing about it is that we're oversold. Okay, we've been selling off since really a good part of May, all June, July. So the whole summer we've been selling off, and we are oversold here. So this could definitely change if we break back above it. Maybe a chop around trying to carve out a bottom here, and then rally up. Then I'd say, hey, you know what? Some good signs in the general market itself, the breadth of the market. So, but anyway, this is still disturbing to me. It needs a lot of work to do. Copper, guys. I don't know what's going on with copper, but I can tell you this is not good. Okay, we have this little trend line here coming up to the bottom here, hovering up these lows. This is not good. And now, even though the market held up, copper just sold off hard. And you look at behind the scenes here, a lot of commercial traders, traders that use copper to hedge copper with their business, has a better idea than a regular equities guy. Well, this is not good. If the market is healthy, copper shouldn't be down here at these levels. So this is something that's a little bit concerning, and I wanted to point out. We have our U.S. dollar chart, cash index end of day, and as you can see here, we did break out. All right, that was a bull trap, sold right back down again, hit that 50-day moving average, and now we're back above it. I think that despite the dollar, which talks about stimulus and printing more money, I think the dollar will ultimately rally either way. Because once this market does sell off, there's nowhere really to put your money in a safe haven. Because you can't do it in gold, right? Because if the market really starts to sell off, what's going to happen is that safe haven sector, let's say gold, will sell off because people will sell their profit in that sector to pay their losses in other sectors. So it doesn't matter. And the only really safe haven would be the U.S. dollar. Okay, so that's just something that I wanted to make point here. Transportation sector, and this is the transports instead of the ETF. I just wanted to show you, look at the big move lower. Now, I will say partly was because we had inventories, and they had a big draw in gasoline and in crude. So that's going to hurt the transportation sector even more when you have, obviously, cost of fuel rising. That's going to hit their bottom line. Okay, so that definitely is part of it, though. But it's not a great sign, guys. So this is something that really let's keep an eye on here. If we start breaking lows, and then I think you're going to get the Dow theorists that do follow. It's going to put a Dow theory sell signal, and they're going to have this whole group looking to sell the market, and that's going to add a lot of pressure to this fragile market already. Okay, 10-minute S&P, 3 days. Look at this, nothing. We have gone nowhere. Just a little bit we sold off. They rallied back up, bear flag, right into this average, right into the lower trend line. And again, a 10-minute just to show you, a little bear flag here, and then sell off, and we broke down into the day. So very frustrated for traders that are trying to put something together, get a day in, and it just doesn't happen unless you find something that just happened to be in front of your screen, whether it be a news, and that happens a lot to me. I'm always surfing, looking for stocks to trade when it's slow. But if it's the day's slow, there's a reason for it. Understand it and just chalk it up as a day that, look, there's nothing going on. I didn't lose any money. All you need is 3-4 good trades a week, and you can put yourself a nice month in for the a nice P&L for the month. Okay, S&P cash daily, back up to 76% here. Nice big bearish rising wedge, and again right to the 1360. Break at 1360, you're going to get this area down here to 1320 area, and then ultimately 13, and then a break at a 1266. Okay, but this is you got some key pivotal support areas. But if one gets lost, it's going to be a magnet going right to the other one. So keep that in mind. This is the spiders. Just looking at the volume here, as you can see, look what happens. Right, We have our up day, low volume. We have our down day, big distribution selling. So something really that's concerning. That I wouldn't be really chasing longs up here. That's definitely something I would not be doing. Transportation sector, the IYT, the ETF. Okay, big. Look at these volume profiles. Nothing really here. So anything to break below here, which we are, right? We're at this area now. If you look back here, we're here. This thing, if this breaks this symmetrical triangle, I think you're going to see a really big flush in this transports, and I think the market will follow suit as well. Same situation with the Russell. Russell, good gauge barometer of risk on, risk off, and this risk on trade is definitely off, guys. If you have the Dow and the S&P rallying and these key sectors not, it's just not going to happen. Now we have these semiconductors, right? The SMHs, and this is the ETF for the SMH. Now, held up well. I will say it has held up well, but I wouldn't even mind a little bit of a pullback here just to kind of unwind some of this overboardness here in these indicators, and then maybe rally and take out this area here. So this is something that we're going to keep an eye on, keep watching. Qs, big cap tech, same thing. Very, 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 very similar. Okay, now I want to if I see some sectors that are hot and starting to move, I'm going to point that out to you guys so you can get some good trade ideas. Now, I mentioned coal like 5 weeks back, and I want to show you. Here is the ANR, right? This is a coal stock. Very similar to ACI, CNX. These are three coal names that I really, really like. Now, in this stock, the sector has been beaten down dramatically. And the reason why, right, they hated coal, right? Well, coal's not going to go away anytime soon. You also have the summer months, which a lot of these utility companies fire up their plants with coal and natural gas. So this is something here that I like. A break above this bullish falling wedge, usually you'll get a back test. So if you miss the breakout, or you take the breakout as basically a quick day trade, which I usually do, and then I wait for the back test, and that back test holds, that's when you could really put some size on and take a run up, at least to that to this average here, about 860. But I think this thing has legs. I think the sector is going to have a big short squeeze going into December. And usually energy is really, really heats up right about now and right into like September, October, November. And that's when everybody stocks up their heating oil and, as you know, the crude oil and all that stuff, all the refinery products. That's where it's going to really move. So this is something I'm watching that I will eventually be taking a position in, and as well as getting that Chinese trade ideas. Once the market participants are out of the ECB and stop looking at the ECB and they say, oh, okay, well, Draghi did his job, they're going to focus on China, and that's not going to be good, and that's something that we're going to be looking at down the road as well. All right, guys, have a great day today, and we'll talk to you tomorrow morning. Take care.